We talked about it a couple weeks ago, and it seems now that it was in fact a leak because SoFi came out this week and announced they are in fact integrating with Zelle. In addition to that, the CEO Anthony Noto keeps buying up shares left and right, and it seems as though institutions are also doing the same. In this video, I'm going to be talking about the SoFi news for this week, so let's dive right into it. Okay, so not a massive week in terms of news. As we know, SoFi recently reported their first quarter results where they triple beat expectations. And since that time, the stock price is down. It took a tumble. Starting off with the stock price is down almost 2% over the past 5 days, with the stock going as high as $7.20 and closing off the week at $6.94. Now, in this series, if you are new, I talk about SoFi news on a weekly basis every Friday, so make sure you subscribe to the channel for more. Starting off with the news, on Monday, we saw that Anthony Noto bought more shares of SoFi. We received a Form 4 on Monday that he had bought an additional 28,775 shares of SoFi at an average price of 6.9 per share, about $200,000 worth of stock. Now, as we know, for Anthony Noto, this is a relatively small purchase, but following this transaction, he owns directly over 8 million shares of SoFi stock. Now, a couple of things that we've noticed in the past when he's bought stock. First is that he usually buys when the stock is depressed, and he's been a heavy buyer in the low $6 range to all the way down to the $4 range. Secondly, he buys when the morale is low, which obviously coincides with the stock price being low. Third, he buys usually preceding a run-up. I mean, we saw last year where he bought in the $4 range, and in a couple of weeks it went up to $12. We saw where he's bought in the $6 range and it goes up to $10. So generally when he buys, it's preceding some type of run-up or some type of news. Obviously, he couldn't buy before the Q1 earnings because he was in a lockup period, right? Number four, he usually buys in batches. I wouldn't be surprised if over the next several weeks we see more Form 4s being released with additional purchases from Anthony Noto. Now, his conviction is quite strong, and he's one of the few CEOs I've seen in the markets that are publicly and consistently just buying up their own shares. Obviously, that's a good sign, as it makes sure that the executives have skin in the game for the company to succeed from a stock price perspective. It aligns interests between the executives and the shareholders. But at this point, it's happened so frequently that I would say it's not as impactful as it was in the past, especially in that $4 range where we needed a morale boost essentially as a SoFi shareholder base. It's only a $200,000 buy, so like I said, I wouldn't be surprised if he starts buying up more. Considering that he now has over 8 million shares, I think that's around 1% of the total outstanding. That might be wrong, but it's around that ballpark. And this is all in addition to his performance-related targets and other executive incentives that you have that are going to be dilutive over time, but that's the same for every company. And another thing to consider on that note is that we might see more Anthony Noto purchases coming very soon, because if you remember, the preferred share redemption is going to be happening at the end of the month. We talked about the preferred share redemption a couple of weeks ago when it was first announced by the company, of which Anthony Noto is a preferred shareholder. So he's holding preferred shares. But if you go back and you read that statement, SoFi announced the intention to buy back those preferred shares by the end of May. So it hasn't actually happened yet. It was just a prelude to say, hey, by the end of May, we're going to be redeeming those preferred shares. Now, Anthony Noto has about 6,000 preferred shares at a $105 price. He would be receiving around 600,000 for those shares, and I wouldn't be surprised to see him plow the proceeds back into SoFi, doubling down, buying more stock on the open market when that money comes through at the end of May. Now, the second piece of interesting news that we saw on Monday was the president of SoFi Bank, Chad Borton, was announced as an executive vice president and president of workforce solutions at Equifax. Now, if you remember, Borton was the second major executive to leave SoFi back in March after Aaron Webster left to join PayPal on March 15th. Borton's last day was on April 12th. I think he announced his resignation end of March. And less than a month later, we saw him starting at this role at Equifax. And I'll reiterate what I mentioned in that video about a month ago. You know, Borton was a seasoned expert. He was never meant to be a permanent member of SoFi Bank. He was essentially brought on board as a last-minute addition and do a lot of the heavy lifting. And now that the bank is up on its feet, he has moved on to other opportunities. Now, moving on to other pieces of news, Tuesday was perhaps the biggest piece of news where SoFi announced one of their highest requested features finally being rolled out, and this is the Zelle integration. This post made by SoFi highlights that eligible members would have access as early as this week and would find it in their app. And for some of you watching, I want you to read this comment because I think it sets the stage nicely. Someone responded, "What is Zelle?" To which SoFi replied, "Zelle is a great way to safely and quickly send money and receive funds, even if the other party banks outside of SoFi. All you need is the recipient's email address or US phone number, and that money will go directly from your account to theirs without a need for an account number." So obviously very easy to use, seamless transaction. And really, I saw this great chart that Riley also put up, and I want to read this post that he made on X. Quote, "SoFi adding Zelle is going to make the company very popular. Zelle is to money transfers what YouTube is to video platforms. There is no competition. People prefer Zelle because it's easy, simple, and it works." The chart here that accompanies the post was by ARK Invest, an e-marketer, and it shows total payment volume across Cash App, Venmo, and as you can see, Zelle is higher than both of these names in terms of the volume. The other reason why this is important is because it's basically a table stakes feature that large legacy financial institutions already have embedded, and currently SoFi not having this feature serves as an objection that somebody would have when considering migrating over to SoFi. So for example, if I'm on Bank of America and I use the Zelle integration frequently, I'm going to be very reluctant to switch over to SoFi and lose that functionality, even if SoFi offers me, 5 or 6 other features, and even if they offer me an attractive sign-on bonus. I need the Zelle feature in order to move over. And so this is exactly what we see happening, SoFi breaking through these barriers of objections that people might have when migrating over. Further to his post, Riley also highlights that this integration is among the top requested for the last 3 years. And if you look at the comments, many people on X are highlighting that now they're going to be moving over to SoFi because there's nothing standing in their way. Zelle was essentially that last hurdle. So it's not like SoFi is going to see a massive influx of customers just rushing to the doors, but rather a more reliable stream of members over time as they continue to break down these objections from a feature perspective that a legacy institution has that they don't yet have. And Zelle is a really big one that they just rolled out. And of course, this is what we want, right? If we want SoFi to receive mass adoption, we have to remove the barriers that stand in the way of people from migrating over. I also, in addition to making a post about applying to a job at SoFi, which obviously I'm not going to cover in this video, I also talked about the institutional ownership continuously rising after the earnings result came in. Now, of course, we don't know what the sell side looks like. We don't know how many people are shorting the stock or what the hedges look like. But from what I can see here, just one-dimensionally speaking, we can see that institutions are slowly layering into their positions as the stock price remains low. And I sort of want to tie that into my next topic, which is this amazing detailed post from Tim, who is a regular contributor to the SoFi community and a valuable resource in SoFi research. Now, Tim posted a comprehensive overview of SoFi, highlighting his expertise and breaking out the current state of SoFi on a long-term point of view. Basically, throughout this entire post, Tim highlights that, in 2024, SoFi is going through a significant transition towards becoming a major bank. He breaks out some of the previous challenges that SoFi has faced in the past, with student loans, with the pandemic, and he touches on the leadership of Noto. He touches on the AWS of fintech and where we want to go longer term. He also dives further in depth on the capital structure and the buying back of convertible debt at a discount, which also improves the cash flow and increases the EPS of the company. He touches on SoFi deliberately reducing lending volumes in 2024 and tightening credit standards, and that this decision is driven by fair value accounting, where the loans are valued based on the expected credit losses, and by maintaining higher quality loans on its books that SoFi can capitalize on fair value premiums. However, the risk here lies in potential write-offs and default rates increase or interest rates declining rapidly. Or for example, if interest rates decline rapidly, this is going to lead to loan refinancing. And throughout this post, I couldn't help but notice a couple of things. One, that it clears up a lot of misconceptions that the market currently has around SoFi, particularly with their accounting and with the lending volumes in 2024. We've talked about this before, and even recently around earnings, around this concept of a transitional year. And secondly, it really reinforced in my mind this long-term time horizon around investing in this company, which includes diversifying product offerings, it includes enhancing the tech architecture, it includes improving that user experience, which we're seeing with features like Zelle, which we're seeing with new product launches, which we're seeing all the way down to their marketing campaigns, right? I think for SoFi investors, it's very important to read a full post like this because it's a grounding experience in the information that it provides to reinforce a long-term vision in investing in SoFi, because I notice all the time many investors are short-sighted and default to the stock price action on a daily basis, and they use the stock price action to determine whether they should feel excited or depressed about the company's underlying prospects. And I just think that's a very flawed measure. It's a very short-term lens to apply on the stock, and quite frankly that it's not accurate at all and how we should be seeing. And so this post by Tim was really refreshing to read. And in fact, we reached out to Tim and we invited him onto the SoFi Weekly podcast later tonight. And that's going to be a very exciting episode, which I'm personally looking forward to. That's going to be tonight at 10 p.m. Eastern on this channel. So make sure that you join. I am pretty excited about it, and I'll see you there soon.